But that's true, especially when you think about it, because this time last year, you're still very far below the 2019 level. Now, so, when you think about the economy, that momentum is there. So it's not just about that kind of base check, the momentum that we quickly, a positive Q1, not very high, admittedly, but still positive.
All right. Good morning, everybody. Should be an interesting morning. We got a lot on the agenda. 8:30, 9:45, 10 o'clock, 1 o'clock, 3 o'clock. Now, by 3 o'clock, those farm prices they're going to be more about affecting any kind of 0 day you have on than anything else. I mean, you're looking at Friday going into the close, into a power hour after a massive rally yesterday and FANG failure last night. I don't see any reason that anybody'd want to be screwing around at that time of day. Having said that, people kind of approach risk in their own ways. So if you are still trading around 3 o'clock, just kind of heads up on those. We want to game it out as we always do, focusing first on the three things that a market could do. We could hold the range, break higher, or sell off. Right? Thanks, Captain Obvious. Glad to know that we have that settled. The current range would be our own Globex low and our Globex high. That's a very muted range in the current market environment with all the volatility. So while it is one thing that could happen, I find it to be very unlikely. Notice as well the market maker move. And we would only see that if others also find it unlikely. So while that is one scenario, I don't believe it. Yesterday's move in the market, that's not trend, guys. A lot of people yesterday asked me what I thought about that trend. That's not trend. To have a trend, you actually have to have higher highs and higher lows, or lower highs and lower lows. When it's one-sided price action and just running nonstop with no profit taking at all of any kind, just straight run, it's an impulse. If you were sitting there waiting for a pullback, how'd that work out for you? Did you get an opportunity to trade? In an impulse play, it's a momentum trade. You have to buy high, sell higher. When we talk about trend trading, we talk about waiting for pullbacks and buy low, sell high. You wouldn't want to see a momentum breakout pullback. It would imply that the momentum is failing. And if that's the only reason that it broke out in the first place, then the entire thing would be failing. So if we are to break to the downside today, what's the likely scenario? Where are we headed? What's the pivots? Past our own Globex low, we would then focus on the open, RTH open of yesterday, which happens to be really close to the Globex low, so I don't really want to remark that. Then we have the initial balance of Wednesday into Thursday. And we have the RTH low of yesterday. And we have the Globex low of yesterday. That gives us 42.35, 42.16, 4,200, and 41.80. So beyond that, or even just asking the question, how far would that get us? That would be a 1.4% move, adding to the minus 1% that we already have. That'd be a 2.5% move. We've got a current ADR of 2%. So while yesterday's low is in range, if we were to start making moves in that direction, it should light up pretty good. You should see technology failing, finance failing, and then of course, the other sectors obviously. But if you don't have tech and finance failing, then you'll get a lot of that muted sideways price action or a slow grind. If we're going to make the low of yesterday, it's not going to be a slow grind to get there. We're going to have to really drop like a rock. And so it shouldn't be subtle. Just like yesterday's move wasn't subtle, right? Okay, so the other scenario, if that is the downside, then what is the upside? We would first want to get back through the initial balance high, the Globex high. Those two are really close together. The Globex high actually ties into the 5 o'clock close. They may be more valid than the initial balance high. It's worth defining both of those, but they're really close together. You can see already price has responded there. When I was in there trading last night, I traded into that. I didn't get this morning. I was busy, but you can see how price responded to both those levels. So I'm going to mark both, but they're pretty close together. We have a pivot minor around 42.70 and our own Globex high to deal with. Should we get through that, we'll start to focus on yesterday's highest high. So to the upside, we have 4,300. There's not a lot between our Globex high and that 4,300, but we want to go out and look and see if we can find anything on the volume profile. Not a whole lot, right? There's some volume at 4280-ish, and then there is some volume at 4300. Beyond that, it gets really shallow, and we don't start to see any kind of interference until we get around 4360. We now have the point of control in the lower portion of this volume profile, and price is back inside the box. We had that much volume yesterday that it brought everything down. Notice the expected move low is 41.24, 41.20. I mean, you know, 41.25. I wouldn't get stressful on a few ticks. So we want to add that to our downside analysis. 41.24 and a half. Seems a long ways down, doesn't it? How far away is that thing? 2.7, and we are already down 1%. That would be a 3.7% move to the downside. Could we do it? Oh, yeah. Absolutely. We could absolutely hit that level, but it would not be sneaky. It would not be subtle. It would look just like yesterday, an impulse play. Only red candles instead of green candles, right? So that would, yeah, that's what that would look like. So to the upside, 4,300 is right about to uh, a one, it'd be a 0.5% positive at that point, because we would have to reclaim the negative percent that we're already down and then have a positive. So that'd put us up about 0.5% on the day. A 1% move is very common and normal. So if we measure a 2% move from our current location, that would be a 1% move. That's 43.25. So that would be my upside target for the day if we did get bullish, which at the moment, with everything looking the way it is, we're not bullish, right? We're down in the indexes 1%. And as you're going to see when we get into the grid here, it's not looking all that hot out there. All right, so that's the ES. Take a look at the NQ. Still have the same kind of discussion. 3 things that we can do: hold the line, maintain the range, break to the upside, break to the downside. At the moment, we have a significant range for Globex between our Globex high and low. This is enough room for us to just do that today, but I would be surprised if we just stick the range. Right, we're down more than 1.25. At the very least, I think we come back down and tag the low, but it will depend significantly on the econ today. The low is 0.69. If you add that to the 0.3, we just move some decimals around a little bit, call it a 2% move. We'd be down 2% on the day, give or take, right? What's a few percentage points among friends? So a 2% move to the downside would get us to the Globex low. Push the range more than that and actually measure yesterday's low. That would get us at 1.8. We're already down 1.3. 1 and 1 is 2. 8 and 3. We just kind of fudge those numbers and say that's another 1. That's our 3%, and the ADR is 3%. Right? So, that's our downside target. That would give us our ADR. If things were to go extreme and we actually moved beyond the ADR, because remember, if 3% is normal, and we're talking about what a normal move would be to the downside, that would get us to the yesterday's low. But what if we actually step out and get a little beyond the norm? Then we would focus on Wednesday's intraday low, and that puts us around 12.93, 12.95. I wouldn't haggle too much on it. So 12.9.5. If things actually turn around and start to get positive again, we would first need to reclaim our own Globex high. To get there, we'd have to get through the 5 o'clock close. We would have to get through the 4 o'clock close. We would need to get through our own Globex high and then aim towards yesterday's high. That last little tweezer top capitulation blow off top might not be worth marking. That's 13.5. 13.55. Maybe better off marking 13.5 flat, right? Because that tweezer top was the last little hurrah there at the end. You'll probably find more weight, more validity at 13.5 than you would find at 13.55. Measure that out. Make sure it actually is something we can hit. If we actually reclaimed the 1.37 that we're down now from our current location, that gets us outside of the Globex. See how those numbers don't fit? You got to watch Think or Swim, man. It's just, it's not even think or swim. You got to, all brokers have these various issues. How can we be down 1.37%? And even just to get through our own Globex, we would need to move not even a 1%, right? But either way. So if we took the 1.37% back and got to flat, that would get us outside of Globex, put us at around 13.45. from flat, if we was to move beyond that and continue to go to the upside, then we would start to focus on a 2% move, which would get us to yesterday's high. And as just to answer my own question, because I was kind of being facetious, here's the 4 o'clock close. It's all the way up here, right? Well, that it depends on how you want to count the candle. My close that I marked was at the close of that candle. But if you consider 4 o'clock being when that candle started, the close would actually be way up there. And from that point of view, from our current location to get back to flat, it would get us up to that point, right? Orderly. As long as you're able to answer the questions, it's all good. So we mark that and just use that for our go. What would a 1% move be to the upside? That would put us at 13.6. And a 2% move to the upside would put us at 13.725. So we have our ranges for the day. We have our targets for the day. Remember, we could just stay sideways. If the news coming through on the calendar is muddy or mixed, or if it doesn't shock at all and nobody's caught off sides, then it's likely that we could have a morning where absolutely nothing happens and we just stick this range. I still find that a little hard to believe, but it's absolutely possible. You take a look at what's moving around this morning in the pre-market. Tesla's got some pre-market volume due to some news, right? Elon says he's not going to sell anymore. And of course, Apple had earnings. It's got some volume. Generally, Apple has some relatively decent pre-market volume every day. This doesn't really stand out. Nothing shaking loose in Google this morning, volume-wise. And even Amazon's got a little bit of love. I would look for a gap close in Tesla this morning. That would be my go-to right off the bat. See if that thing can come back down and close the gap from last night where it closed to where we opened this morning, if we don't get that thing closed before the bell. All right, so we're looking at oil. And as you can see, oil's continued that march to the upside with a slow grind. It's just doing the thing, nice and quiet and subtle, continuing to make those moves. I will point out, however, that the swings are getting smaller and smaller. It's usually a sign that things are beginning to slow down enough that we could start to see a reversal. You want to kind of like quantify how far away from the line we get each time, right? So when things begin to get violent and volatile, we usually get pretty far away. And then when things start to tighten up and we end up getting more of a topping pattern before the dump, we very often see things begin to compress around that linear regression line. So watch for a reversal in energy. We don't do quantitative analysis on the VIX. That'd be kind of silly, right? The VIX is nothing more than measured volume on an option strike 30 days away in the SPX. Well, I've never seen anybody bring up volume and start applying technical analysis to it, measuring support and resistance and trying to identify momentum and trend. And I mean, doesn't that just sound absolutely silly? Well, if the VIX is a calculated formula based on 30-day SPX options volume, then why would we want to perform technical analysis on it? We just look at it. It's a gauge. But just like any gauge, there can be discrepancies. You can identify divergence, right? We use the same kind of logic looking at RSIs, stochastics, MACD, things of that nature, looking at the tick charts. So It's not that we don't want to try to validate or recognize areas, maybe spot divergence, but I'm certainly not going to perform any sort of technical analysis and start divining levels of support and resistance. That's just silly. Do want to recognize that it seems very muted still. All right. If things were beginning to get out of control, we would expect to see some action in here, and not so much, huh? Bitcoin is continuing to match or meet and often lead the move. So if you are trying to trade in the futures, keep your eye on Bitcoin. Use it as long as you can get away with it. This thing has been a confirming signal for breakouts, lack of a breakout, confirmations in the move. Use it. Use it until it no longer works, right? And of course, it won't last forever. Take what you can get when you can get it. Gold is topping out. A little concerned about this topping pattern. We are in a bit of a wedge. The flat wedge is different than a typical rising wedge. Still, generally speaking, this seems like well, we'll just approach it from a different point of view and say it can't stay here, right? At the end of the day, no matter how else anything shakes out, this cannot stay here. It is going to leave this range. What are we going to do with it, or how it will impact the market? What you're going to be looking for is any large moves in here in either direction, and how it may affect or define or confirm or validate something that we see moving somewhere else, like oil. Right? Remember that gold has been used as the hedge against inflation. So as long as investors still seem to believe that inflation is getting worse or getting out of control, or that they need that hedge, then we should continue to see gold moving to the upside. Looking at the 30-year bond, it was a very strange day yesterday. It wasn't responding to what was happening in the other indexes at all. It's like this thing was just decoupled 100% from the rest of the market. I don't know what to do about that. Doesn't make sense. Definitely keep your eye on it today. Look to see if the thing wakes up or not. Right now, we've been saying it for like a week. This thing needs to quit moving and just settle down. Well, that's what it did yesterday, and then it got spooky. Right? It's like having kids, and then you realize that the house is really quiet. You got to try to figure out, what are the little turds doing? Why did it get so quiet? It's got to make you nervous, right? You got to go check on them. Well, this thing quit moving around, and it wasn't making any noise anymore. Made me a little nervous. Keep your eye on this thing. The dollar did sell off. Not sure that that's going to stick, but after the move that we've seen this week in the dollar, it was almost owed a pullback. It is starting to bid back up again. Keep your eye on it. Notice as well the lack of participation through the move yesterday. Now, if you kind of visualize that absolute rocket ship in the stock market, and then you look at something like the bonds and you look at the dollar, they didn't respond. It didn't go inverse, and it didn't go with it. It didn't participate. It just sat there smelling the roses. Right? Really keep your eye on these two markets today. See if they're going to participate or respond, or bring in any kind of sentiment on this. All right, looking at the sectors this morning, it might be better off just to ask, is there anything green? So emerging markets is up 1.5, but it is giving it back. Keep your eye on this. We want to continue to see it fade off for a validation that the market is weak today. as if we need more. Gold and silver is up this morning. A little bit of energy is up, not across the board, not all the different energies. Just kind of keep your eye on which energy you're talking about. And after that, just about everything else is down, right? And I like to use at least a 0.5%, positive or minus, before I start considering something has actually made the move in the pre-market for our measurements. So things that are down, at 0.38 or 0.21, I'm not considering that down. Same thing on the positive side. If we're up 0.1% in energy or in real estate, or that's negligible values, right? We want to see at least a 0.5%. So across the board, most of the sectors are down. The two that are going to be the most impactful is technology and finance. They are our leading risk on sectors. You have to have at least one of those two to see a rally in the S&P or the NASDAQ. Having said that, though, the FANGs can do the job on their own, except the FANGs belong to those sectors. So you would very likely see those sectors move positively anyways, right? But still, FANGs override sectors, sectors override the indexes. So if we're going to see this reversal and come out of this range, we're going to need the absolute participation of one of those two sectors, preferably both. Very likely it's going to be some sort of reevaluation of the news from the earnings last night. Apple didn't have a bad earnings necessarily. It was their forward guidance that really gave them the whack, right? So kind of see how it shakes loose. Play it by ear, perhaps. Looking at those sectors really doesn't do it. The 11 legacy sectors miss the point. They miss some of our modern things that we would want to focus in on, like the crypto. How's crypto doing this morning? And it seems to be red across the board. Everything is down. There are a few that are slightly up. So like the blockchain ETF, a few others. But for the most part, everything is down. The electric vehicles market, same thing. We have a couple names that are up: NIO, XPEV, Liato. But then we have more of our legacy names like Ford, GM, Rivian that are down, right? And again, they have to be down at least 0.25% or 0.5% before we even consider that they're down at all. And of course, we've got to always take a look at the pot market, see what's going on over there. Mostly negative. The real estate side is up. XXII, 22nd Century. It's a real estate group that specializes in helping marijuana companies find real estate. It's up this morning. But everything else is basically down. And, there were some pretty good moves in the last few days in there. So maybe we could start to see some reversal on some of these names. I wouldn't hold my breath, but the reversal has to start at some point. You can see how it's magically just trailing underneath that 200 period moving average, and every test has been rejected. So if you're looking for a play in the pot market, then a clear break above the 200 period moving average on a 30-minute chart, break above and close above would be a nice little validation signal. Oh, that's so hard to see on that white screen, but something like that, just recognizing that it has to get through there first. Oh boy, now I did it. All right, so if the sectors are out and we don't want to use them for opportunities to trade, then we've got to lean into our own list, right? We got to be stock pickers today using our own watch lists. As you can see from these two lists on the bottom, there are plenty of things to trade today. Things that are up slightly on the day. Maybe, I wouldn't want to try to go long in something that's already up 13%, but there are opportunities to trade that in things that aren't up that bad. X Steel's up 2% and it's got a little bit of a pullback in there, right? So plenty of names, plenty of opportunities. Things are moving in both directions. It's a two-sided market right now. These two watch lists are nothing more than products that have weekly options. I just went in and ran a scan and said, what's got weeklies? And then I made a list out of that. 600 names. It's a lot of names. But as you can see, there's plenty of names that are up this morning, or at least flat, right? Which offer another opportunity. So, you don't have to focus on all the negative. On the other side of that too, if you were to narrow down your list considerably, maybe focus on the high lows. That indicator is absolutely phenomenal. I've done videos on it. You can find it in the Bullish Bears Discord under large caps. It explains what it is. There's even an article that goes with it that talks about it more. It shows you how to put the settings in place. And that thing is like non-stop day trade opportunities all day long, and it doesn't require any special coding. And it's free. Like free. Free's cool. All right, everybody, that's what I got. Be careful, be safe, have a good weekend. See you all next week.